Okay, index markets. So just generally speaking, one of the things that a previous instructor of mine had gone over and done an enormous amount of research on and looking into that, generally speaking, I'll pop open the daily chart here as we talk about this. Index markets typically rise about 3 to 5% in the 5 days prior to an FOMC announcement. And it's one of those things that you can actually go and do some back testing on yourself if you're interested in validating that. You can go back and look at the announcement dates for every one of the FOMC ones on each the third Wednesday of each month. Mark that. With TradeStation, it's a pretty simple exercise. You can get your up and down markers here. As you can see, I can actually put a marker on here that shows the date, and you just count off 5 candles prior to that, and look at what price was at the 5 days prior, and just know that you expect about on average you get a 3 to 5% increase there, and then you get a 1 to 2% drop the day after. So those are things we don't use them to trade on, but when they happen routinely around announcements like that, it's just good to know that is at least an expected result there. And so if we take the announcement date, and really it's going to be tomorrow, so you go so that's 1 day, so 1, 2, 3, 4, 5. This would have been our target area here. We would have expected a 3 to 5% increase from this line right here, and as you can see, didn't get that. And especially yesterday, really did expect to get a little bit bigger push up yesterday based on that. Didn't take any trades on that, but just was kind of expecting that, and clearly that did not happen at all. So we've got a little bit of a different situation here. Generally speaking, whenever I say anything that is different than what I am used to, that's just a really clear indication to pause, right? A couple things, other instructors, other people have said, either take your hands off the keyboard, take your hands off the mouse, sit on them, right? Whatever it is that you need to do to not take trades when it's not high probability. We've talked about this a little bit before, right? Generally speaking, anyone that is talking about trading always tells you here's when to take trades. One of the things that they don't do a good enough job of doing, and I try and do some here, is identify the areas when it's best not to take trades. And so things like this, where the behaviors of the markets that are not expected or not normal, good time to just take that break. A couple of other areas too, like when I see all the major index markets, if they're not correlated, so they're not moving together, that's another good indication, right? That something is a little bit off, and you just might want to be a little bit extra cautious before you take any trades, particularly on smaller time frames there.